Hello everyone and welcome back to the gap trading series. We haven't done one of these videos in a while for Apple, so let's get into it. And remember, unleash your trading instinct. So before we jump into the chart, let's take a look at our framework. We repeat this over and over again because it's important. It reminds us of our framework, of our strategy. This is how we're consistent. That's how we make money every day in the market and limit our risk. They are the golden rules, the principles that we live by day in and day out. So when we're gap trading, we're looking for stocks that have institutional participation. And right now in our series on this channel, we're really just trading 3-4 stocks, right? We have Nvidia, we have Apple, we have Moderna. We're looking at AMC and BTB. Those are some other stocks we're looking at in some of our other videos. Check those out when you have a second. Then it's the deal. So the deal is the closing price of the gap or the opening price of the gap. So there's a white space there. We're going to take a look at what that white space is. And those are usually your entries or exits. And that's the rule that we follow. There's more to it. And you can find the fundamentals on our Patreon. So if you want to get the details of that strategy, join us there. And risk management. So we like to risk 0.5%, 1.5%. That is totally possible on Apple. You're looking at risking $1 to $1.50, when you're taking on a trade. And you can really manage your risk that way and, stay in the game and, not, liquidate your account like you do with leverage trading. So let's get into the chart, shall we? There we go. We got Apple on the docket. What a beautiful trade setup this morning. And we often talk about this. So when we have a gap higher, the best scenario for a gap higher is immediately selling back and filling that gap. So we have an order here, and we would have an order here, right? So somewhere in this range is what we were looking to get into. And this morning, when I saw it immediately sell off and fill that gap, I was excited, and I got in a little later. I got in at 147, and that's okay because we had already kind of filled the gap. So if I go, this is a 15-minute chart, so every candle is 15 minutes. If I go to the 5-minute chart, you can see that we dipped in the morning here, and then as we're coming back up, that's where we got in roughly at a 147. We missed the 180. 186, 187 mark here. That's okay. Sometimes you really have to take action and just jump in and just get over your emotions. And when you do this on a regular basis, you know where you're wrong. You have your lines drawn. And I'm going to do a video on how to draw your lines. Just specifically for people who are looking, to get better at that, so you can know where you're wrong. And where I would be wrong is 146. So we'd be risking $1. And if we start closing down here, then on a 5-minute, 15-minute candle basis and 1 hour, then I would be looking at closing my position. So sometimes we come down and we just spike through it, and then we close back above it. And that's why I don't do stop losses. Entering a stop loss in the system, I just manually close my position. I give the market opportunity for volatility and to kind of swing back in my direction. Sometimes I take a little bit more risk of 1.5%, but sometimes it works in my favor. So I find there's a better balance there. And as you can see, it just ripped this morning, and we got out when we hit our it was like $1.10. We were up $1.10. We just closed it because why? Because we have this resistance here, and then we have more resistance on top here, and we figured that it's not the $1.40 that we normally look for, but sometimes you just have to pull profits. We'll see how this trade goes. We can, definitely just kill time off the clock for the rest of the day here, which then, will lead for a setup tomorrow to get to 149. So that's another $1 to be made there. And then if we go on to the hourly chart, let's see what we have here. So yeah, so this is a really good example. So let's take a look at the hourly chart, and let me just remove this. And you can see we traded. So if I didn't flip it to the hourly chart, I was just happy with my $1 gain. But if I was more technical and paying attention a little bit more, right? If I would be flipping through my time frames like we do here, this is the wrong one. I would see that $1.48, 148.50 is actually the correct area. It's actually the correct area to sell, and we hit that exactly. So I should have waited for this to test the breakdown high of this candle here. That's what the market does. And you'll see in my videos over and over and over again, the market does that. And that's why we only focus on the highs and lows of breakup candles, because that's where key areas are. Right here, you can see that we traded back. If we back test this idea, you can see we traded right back to that level, right? We went down, back up, right back down there. When you went down, back up, right back to this level. We're going to go down, and then it went back up to this level, right? And then we're going to go down and back up to this level. Like, that's the kind of pattern we're probably going to see here going forward. We're on the bullish market, but we'll see. We trade, we're day trading this, so we're just wait for the opening candle to kind of let us know what direction the market is. So hopefully you learn something. If you want more, one-on-one coaching, training, or education, or entertainment, you just want to have more fun, join me on Patreon. Like, subscribe, all that cool stuff, and I definitely appreciate. Comment below. I always respond to my comments, so we can have a little discussion down there too. Again, thank you for watching. Have a good day.